Farmers, trust is everything. At Genesis Fertilizers, we're not just proposing to build a facility, we're building a future designed for you. With real progress already underway, we're closer to providing Western Canadian farmers with a reliable, locally produced fertilizer supply. Now is the time to take control of your farm's future. Learn more at genesisfertilizers.com/credibility.
It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio.
Hello and welcome to RealAg Radio here on Rural Radio Channel 147, Sirius XM. I am your host, Lyndsey Smith, and yes, it is Tuesdays with Lyndsey, back finally after all the jockeying back and forth for this show, that show, whatever. And actually, if Sean promised you he'd be back today, I'm here to tell you, no, it's me. I took my show back. And we've got a riveting one for you. So, of course, we did hear yesterday that President-elect Donald Trump is threatening 25% tariffs on Canada and Mexico, all goods going into the U.S. from those two countries. I've got Kelvin Heppner with me, also, of course, of Real Agriculture, to break down what we know so far and the potential impacts of a tariff of that size, and also what Canada could do with the runway it does have ahead of January 20th to potentially waylay this tariff. So stick around. That's after the break. Kelvin Heppner will join me to break down the tariff news. We've also got on today's show, you'll hear from Zimmerman. He's with Rabobank. He's going to talk about beef markets, beef consumption, beef prices in the U.S. and how that, of course, relates to the Canadian supply chains as well. So Sean Haney will have that interview. I've also grabbed a piece from, and you may have heard some of this earlier, or maybe you heard it on our YouTube channel or on RealAgriculture.com, but I'm going to pull a clip of Darryl Monette of Monette Farms. So that is from the Truth About Ag podcast. And now that is hosted by Evan Shout and Christian Hebert. And it is also cross-posted, of course, here on Real Agriculture and on our YouTube channel. And so that particular episode has been incredibly popular for obvious reasons, as you'll hear when we pull that clip later in the show. And highly encourage you, head on over to YouTube on our channel, Real Agriculture, or, of course, the Truth About Ag podcast. You can listen to it there. We got some phenomenal feedback. Now, while you're there, subscribe to our YouTube because, of course, every 2 weeks there is a new Truth About Ag episode that comes out. And that's in addition, of course, to all of our podcasts that are there as well. So check it out. And then we've got some news out of Saskatchewan. Conexus Credit Union is launching a new $100 million ag grow fund. So this is a chunk of money set aside specifically for buying land, buildings, livestock, etc. for farmers in Saskatchewan. And I've got Garnet Volk that is going to join me on the show to talk about why Conexus Credit Union is doing this now and some details about that particular fund. So that is at the end of the show. Now, before we hop to a break and Kelvin joins me for a discussion on tariffs, I did want to remind everyone, and we planned this webinar a couple weeks ago, and this is going to happen tomorrow with the Canadian Agri-Food Policy Institute, CAPI. You'll be very familiar, of course, with Tyler McCann, the managing director, who joins us on the issues panel quite often. CAPI and Real Agriculture have teamed up to host a webinar tomorrow, November 27th, 11 a.m. Eastern Time, on the potential impacts of a second Trump presidency. And we planned this before Trump announced these potential tariffs. I had one word for Sean and for Kelvin this morning when we were talking about it, spicy. That is what tomorrow's webinar may be. So if you are not yet signed up, you can head on over to realagriculture.com. You can search webinar. It will pop up there. Or you can, of course, head to CAPI's website as well. Just put it in that search bar, CAPI policy, whatever you want to put in there, you'll find it there and you can register for that meeting. Now, remember, this is a webinar and it won't be available after the fact. So snippets of it maybe, but we know that we won't be releasing the entire discussion after. So if you want in on that discussion, please register ahead of time. That is 11 a.m. Wednesday, November 27th, 11 a.m. Eastern. So check that out, get registered, and we'll see you there. I'll definitely be on there. Absolutely. All right, let's hop to a break, and I'll be back with Kelvin Heppner to talk tariffs right after this. Joining me now with Genesis Fertilizers, Terry Drabuc. Now, in times of high demand, Western Canadian farmers often face price pressure from U.S. buyers because of that competition. How does Genesis Fertilizers plan to alleviate that competitive pressure and create more secure supply for Western farmers?
Well, we don't plan on lowering the price. So the model is around the investor farmers paying exactly what they would pay today. So we would be competitive in that high sales, low manufacturing costs. We plan on giving the profit back to the farmer as close to the cost of production as we possibly can. So they're entitled to the product and they get the profit from the product. And we call it a closed loop system, which is actually really critical. It's unlike any other model that you can see around the world because as the owners, they're also the ones who will take the product from the plant.
For anyone who's interested, how Genesis Fertilizers plans to deliver this, where can they go?
The best place is our website, genesisfertilizers.com.
If you're involved in the agriculture industry, it's important to stay informed on all the latest issues affecting your business. At RealAgriculture.com, we offer fast, reliable news, information, and insights to help you keep on top of all of the latest in Canadian agriculture. Visit RealAgriculture.com and sign up for our free daily newsletter covering everything from news, agronomy, animal agriculture, and much more. Visit RealAgriculture.com/subscribe today.
Welcome back to RealAg Radio here on Rural Radio, Channel 147, Sirius XM. I am your host, Lyndsey Smith, and this segment is brought to you by SGS Canada, delivering reliable agricultural lab testing for your crops, soil, feed, water, and seed. SGS Canada is uniquely positioned, ready to elevate your business in Canada and the U.S. Call now at 1-800-952-5407. I'm Lyndsey Smith with Real Agriculture, and joining me now is Kelvin Heppner, also with Real Agriculture. It's like we know each other. Anyway, Kelvin, big news yesterday out of the U.S. We certainly saw a lot of reaction as well, so we're going to unpack that. President-elect Donald Trump announcing a 25% tariff across the board on Canada and Mexico, threatening this, of course, on his first day in office. So catch us up on what was announced, and then we'll dig into the how and the why.
Yeah, so far in terms of details, all we have is President-elect Trump's post on his Truth Social platform late Monday. And like you said, he announced a plan to, on his first day in office on January 20th, sign an executive order. He said he would sign all necessary documents to charge Mexico and Canada a 25% tariff on all products coming into the country, and that the tariffs will remain in effect until Canada and Mexico take actions to stop the flow of drugs, in particular fentanyl, and illegal migrants across these borders. And so Canada has been lumped in with Mexico. To me, there is a scale issue here where Canada definitely has border issues to deal with, and there has been signs of escalating illegal traffic going south from Canada. But to lump Canada in with Mexico does seem like a bit of a stretch here, as last year we saw U.S. Border Patrol reported almost 2.5 million enforcement encounters on the U.S. southern border, and the Canada-U.S. border number was around 10,000. So 250 times more enforcement encounters on the southern border, and here Canada's been lumped in with Mexico on these tariffs.
So there's a lot going on here. One of the things I think I'm perhaps maybe surprised about is by naming illegal drug movement and illegal border movement, does that give us an opportunity to perhaps sit down and say, okay, that's what you care about, here's what we're doing about it? So, I mean, on one hand, I'm sort of like, hey, maybe that's not so bad. On the other, 25% is more than the 10% we were threatened with prior to Trump's election. But does this not countervene the USMCA trade deal that Trump actually signed?
Yeah, it would very likely violate USMCA or CUSMA, and that would open it up to legal action from U.S. importers who have signed import contracts under the terms of that free trade deal. And so that's something that we have to see unfold here in the coming weeks. And keep in mind, this is classic Trump negotiating tactics here. Announce a harsh consequence with few details of how it's going to be implemented. Try to gain concessions in the meantime, and we have almost 2 months of runway until this would take effect. So I do think that there is time here for this plan to change in the meantime. There's lots of runway here. And going back to your point, Lyndsey, about whether this is something that Canada could move to address, I think that's a question that the Canadian government and negotiators need to figure out here as soon as possible. Is this really about fentanyl and illegal border crossers coming from Canada, or is this about something else, such as the trade deficit, which would be right out of Robert Lighthizer trade policy playbook? So there's no question the Canadian government needs to do more to show, and can do more to show it's working to tighten up the border and to ensure that U.S. lawmakers understand that Canada and Mexico are not in the same realm when it comes to the risk to the U.S. on these fronts. But I think if it's really about reducing the trade deficits, then the questions about how to mitigate this get a lot tougher. If it's about reducing the flow of illegal drugs and people that shouldn't be crossing the border, I think that's something that the Canadian government, like you said, can move to address and show that they're working on.
Yeah. So, in some ways, this is sort of like one of those, as Jay Strovey likes to point out, the good, bad, good sandwich. Higher tariffs than we thought on everything. But maybe the sticking points may be something that we are in a much better position to do something on. But what if the goalpost moves? So that's our bad, good, bad sandwich. Okay. So let's back up a step though, because with this news coming out and with even just preliminary discussions on this, we saw in the first Trump presidency, a basic guessing at what tariffs meant as to who pays them. There's a lot to argue over the impact of tariffs. They're a common tool used between countries to try and adjust trade flows. Tariffs are paid by the buyer, but that doesn't mean they don't have an impact on the seller. Walk me through an example so that we can sort of put some bookends on this from a Canadian perspective of just how incredibly bad a 25% tariff could be on a Canadian seller, let's say.
Yeah, the pain of these tariffs, as has been talked about for the last many years, going back to the first Trump administration and the first tariffs, is borne largely by the importers and consumers. That's where Democrats in the U.S. were referring to these tariffs as essentially a tax. But it is shared on both sides. The exporters in the other country that is trading with the U.S. that are facing the tariffs do also feel the pain, certainly. And that's something that, for example, Canadian agricultural machinery exporters, manufacturers here in Canada, right now will be having some difficult conversations in the coming weeks about their pricing in the U.S. market. A lot of them rely heavily on sales into the U.S., and so their customers now will be having to pay that tariff. So say a manufacturer here in Manitoba is selling a grain vac or a grain cart into the U.S. Midwest. Those customers will now have to pay a 25% duty if this goes ahead as announced by President-elect Trump on Truth Social last night. They'd have to pay a 25% additional levy on that purchase price. And so in the long run, that's really not good for Canadian manufacturers, the exporting businesses either, because they will lose market share to U.S. domestic manufacturers. And so that pain is basically it decreases the efficiency of the market all around. We ignore comparative advantage from an economic perspective and increase the burden on U.S. customers as well as on exporters in our country. And so that's something that the weaker dollar will also factor into this as well, Lyndsey, where we saw last night the dollar dropped over 1% on the news from Trump's post. And so that will help Canadian manufacturers and exporters, even farmers, with our grain prices here in terms of competitiveness on the global scale, having a lower dollar. But at the same time, we still have to purchase things, inputs such as steel and supplies from the U.S. and other countries. And so a weaker dollar won't go as far on the purchasing side here. And so that cost will have to be passed on. And so, yeah, there's a lot of difficult conversations and storms to navigate here when it comes to the potential for these tariffs. And again, the uncertainty surrounding this, whether this is just a threat or whether this is something that the incoming Trump administration actually plans to implement, is a question that certainly billions of dollars will swing in the balance here in the coming weeks, whether or not this actually gets implemented.
And so in thinking about it from that perspective of, and you're right, we've got to think about currency exchange too in this discussion, but over 75% of what Canada sells as far as value, okay, Canada as a whole, everybody, is bought by the US. And there are still people who think this won't be that bad. And granted, this is a threat of a tariff. This has not been implemented. As you mentioned, we have some runway here to potentially work out, okay, that's the threat. Here's what Canada's going to do. Here's our plan. Here's our 10-point plan. Here's how we're going to do it. And maybe Trump turns around and says, thank you for that. It's only going to be a 10% tariff or whatever the case may be. So, but we can't underestimate how impactful the U.S. basically treating us, like an enemy, not a friend, would be on the Canadian economy.
Yeah, it would be devastating. Or there's been some analysis looking at it, and people like Trevor Toome at the University of Calgary have looked at it, and definitely a significant hit to the Canadian GDP if this goes ahead, especially if Canada retaliates and implements tariffs, and other countries around the world implement tariffs on American goods. Then that decreases the efficiency of markets even more and raises the costs for everybody around the world. And so that's where we could enter. If we enter into a trade war, that certainly is not good for the Canadian economy. And like you said, Lyndsey, we are heavily reliant on exports, much more reliant on exports than the U.S. is, just because we don't have that domestic market here at home to sell into. We live next door to our largest market and neighbor and ally. And so, yeah, it'll be something to watch here in terms of the political messaging around this as well. We have, as we're chatting right now, we have yet to hear from Conservative Party leader Pierre Poilievre here in Canada, but our American friends can see the polls here in Canada showing that Justin Trudeau and the Liberals' time in government is likely limited, and so we don't have a specific end date as with the Biden administration in the U.S., but Prime Minister Trudeau and his team are essentially negotiating from a lame duck position, similar to what President Biden is in right now. And so I think, certainly need to be paying close attention to what Pierre Poilievre and the Conservative Party comes out with in terms of messaging and positioning for Canada going forward if they are going to be forming the next government, which is what the polls seem to be indicating, and American negotiators and lawmakers can see that at this time as well.
Mm-hmm. Okay. And lastly, before I let you go, some of those key items from the agriculture perspective, I think about our hog industry fully integrated with the U.S. I think about our beef supply chains fully integrated with the U.S. So obviously currency comes into play there, right? The American dollar goes farther in Canada if there are no tariffs. So that could be an advantage for the U.S. Side and keep Canada very happy with its exports to the U.S. But potash, the potash coming out of Saskatchewan that is put over millions of U.S. acres, most of it comes from Saskatchewan. Would you or could you see where that if we do retaliate, which please don't, but if we did, would those be where would we? Would we actually put a retaliatory tariff on oil and gas or potash?
Well, that is where Canada would have a lot of leverage. And so I guess it'll be interesting to see. I'm sure that there are people at Global Affairs Canada who have been working on these lists. At least I would hope that they have been preparing. This isn't a surprise that we are in this, or this is a scenario that has certainly been in the realm of possibility for the last number of months. And so I think, potash could be one. You mentioned energy. I think that's one where I wouldn't be surprised if that's the first thing that is exempted from these tariffs in the next 2 months here, because U.S. gas prices would go up significantly, noticeably for U.S. American consumers, if a 25% tariff is applied to all of the energy stuff coming from Alberta and from Western Canada. And so that's one where President-elect Trump ran on a platform of reducing gas prices and drilling more oil and that type of thing. And this would definitely contravene that if a 25% tariff is applied to energy. And like you said, fertilizer would be another example right there near the top of the list in terms of things that the U.S. market relies on, and where U.S. customers would notice a huge increase in price if 25% tariffs are actually put in place. So the question now is, how much walking back is there between now and January 20th in terms of exemptions or reductions in this number, whether there is a way of getting out of it completely. That is maybe a difficult scenario to imagine, given how far President-elect Trump and his team have gone here in announcing this tariff on everything. But certainly that's something that we're going to be following, and markets are certainly following here in the coming weeks.
Mm-hmm. Absolutely. And there's a giant holiday season in between now and then. So everybody in the government, you're not getting a holiday. Christmas is canceled. You got work to do. I'll let them know, Kelvin. You don't have to give them that news. I'll give them that news. Yeah. All right. Okay. Kelvin, and you'll be back for the Friday issues panel. This, of course, we'll see what changes between now and then. But we'll be digging into this further on the issues panel on Friday. So thanks so much for joining me on the show today.
Thanks. We'll be following this. And if I'm back Friday, but happy Thanksgiving to our American friends in the meantime.
Our American friends. Maybe this is really happy for them, but maybe not. All right. We'll be back with more RealAg Radio right after this.
Advanced canola trait technology is here. And it's soon to be the talk of the town. Optimum Glide delivers excellent yield potential and agronomic trait performance. Improved crop safety. Enhanced weed control. And a wider window of application. You're going to want to see this. Learn more at OptimumGlide.ca.
Here's what Wheat Pete's word on RealAgriculture.com is all about in under 30 seconds.
It's wheat time. I love wheat time. I love wheat. Get that sulfur on. Get that seeding rate right. Get that nitrogen on your wheat right. Get that protein. Know your variety. Know when you need to put fungicides on. Pick your product. Pick your rate. Do the right job. Get this wheat crop right. Have a nice day. Grow amazing wheat.
I'm Lyndsey Smith from RealAgriculture.com. Join me Monday nights for The Agronomists, a 1-hour live and interactive show broadcast across YouTube, Facebook, and X. Monday nights at 8 p.m. Eastern, I host expert agronomists from all over the country to give you answers to some of the toughest agronomic questions. Join us live or catch the replay Tuesday morning. That's The Agronomists with me, Lyndsey Smith, Monday nights live at 8 p.m. Eastern. Welcome back to RealAg Radio here on Rural Radio Channel 147, Sirius XM. The next generation of Brandt Utroff augers is here. They can move up to 9,000 bushels per hour, even in the harshest conditions. Visit your local Brandt dealer today for more information. All right, joining me now, I've got Garnet Volk. He's the Chief Growth Officer with Conexus Credit Union. Welcome here, Garnet.
Thank you very much.
All right, we've got some exciting news from Conexus this week. The announcement of the $100 million Ag Grow Fund being offered by Conexus. Garnet, tell me more. What is this and what's the motivation behind it?
Well, thank you for the question, Lyndsey, and thanks again for the opportunity to be on the show this morning. It's a new program, and we're really excited about this announcement called the Ag Grow Fund. It's a new lending program, as I said, that offers our ag producers exclusive discounted fixed rates, no fees, really just an opportunity to help save some money and reinvest in their operations at this time.
So now it's $100 million that's been set aside. As you mentioned, some unique features to it, depending on rates or reduced fees. Are there limits to what it can be used for, or what can it be used for, and what's the cap on the amount that producers or businesses could access?
Yeah, absolutely. So we have a $2 million per member cap, and that's in funding, and so that would contribute up to $100 million total lending cap. We will be, hopefully we have to review that cap and consider if there's an opportunity to expand that even further. That'll be, based on the success of the program, and we'll determine that at that time. But qualifying for this, you're able to use that in any investments that you are going to contribute to the growth of your operation. So if you're investing in land, buildings, equipment, livestock, those are all eligible expenses, and we're just there to help support our producers with confidence when they make those investments.
Now, are there I know there's no age limit or anything like that, because sometimes these programs have, they're geared towards certain stage of a business or certain age. Is there a particular, stage of company that this is geared towards, or is this something for pretty much anyone who's looking to grow their farm and ag business?
That's right. We don't have any age restrictions on it. This is open for all producers, any size, any stage of their farm operation. They're able to take advantage of this program. We appreciate, some producers may not be looking to invest in one asset category, but might be looking to invest in another. And we're just happy to support all members in the choices that they're making and how they grow their operations.
Now, when looking at this and looking at other offerings from Conexus, how does this fit in with the accelerator program that Conexus has? Because of course there's an ag tech play here that Conexus has been involved in. So does this complement that? Is this in addition to? What does that look like when you put it all together?
Yeah, it's definitely in addition to. So, Conexus supports agriculture in many different ways. And our Ag Tech Accelerator program, that's by the cultivator, we invest in incubate companies. We help them facilitate, accelerate their growth in ag tech. And what we do is we connect farmers with founders, tech founders, and funders. And so that's a separate program, all run out of our cultivator powered by Conexus, right here in Saskatchewan as well.
Okay, so this is in addition to, potentially could run parallel to, but they're different streams within the ag space.
Absolutely, totally different programs. One's more on the debt financing side, and the other one is linking those farmers to founders and funders and investing in ag tech to help support their operations in very different ways. Yeah.
Mm-hmm. So why this fund? Why now? Why this specific fund now for the agriculture space?
So at Conexus, we understand agriculture. We understand the value that agriculture contributes to the health of our economy. We're committed to all of our members' success, and we're committed to helping Saskatchewan agriculture grow and help the province grow. So, why now? We know that producers can always use support now more than ever. So it's a win for producers. It's a win for Saskatchewan and the ag community, and it's also a win for Conexus. So we're just really excited about being able to help in any way we can.
Mm-hmm. All right. Okay. And so for those producers who are interested potentially in looking at the details, in perhaps applying, where can they go for more information?
So you'll see a lot of social media right now. We're at Agribition. There's a number of interviews, and our booth at Agribition would be a great place if you happen to be in Regina right now. But absolutely, on our website, with all the details there, talk to one of our advisors, reach out to our contact center, and any of our ag advisors would be more than happy to walk you through next steps if we can help you grow your operation with the Ag Grow Fund.
All right. Garnet, thank you so much for joining me on the show today.
Thank you, Lyndsey. Have a great day.
We're going to take a quick break, and I'll be back with more Real Ag Radio right after this.
I get to spend every day talking to farmers in the ag industry through RealAgriculture.com and RealAg Radio. But nothing is more fun than speaking to an audience live and in person. If you're planning an ag event, book a Real Agriculture speaker to make it a successful and memorable experience. Email shaney@realagriculture.com and you can book myself or any other Real Ag personality to speak at your event. Bring your audience all the fun, insight, and energy of Real Agriculture.
There's a reason we call it the Corn School. Videos on everything from planter setup to weed control, field trial results, and the latest yield strategies. The Corn School on RealAgriculture.com has the information and advice you need to help you succeed. Brought to you by Pride Seeds and BASF. Corn School episodes are available at cornschool.com, from RealAgriculture.com, or as a podcast in your favorite podcast app. Check out the latest Corn School episode today.
Welcome back to Real Ag Radio. I am your host on this Tuesday, November 26th, Lyndsey Smith. With advancements in artificial intelligence, biotechnology, and precision agriculture, we're moving into a new era of innovation. Join agriculture industry leaders in Ottawa December 3rd to 5th to explore the future of agriculture and how Canada can capitalize on its opportunity to be a global agriculture leader. Visit growcanadaconference.ca to register now.
Sean Haney here with RealAgriculture.com, RealAg Radio, Rural Radio 147, Sirius XM. We're at the National Association of Farm Broadcasters meeting in Kansas City, and right now we're in the Rabobank booth, and we're joined by Lance Zimmerman. Lance, how are we doing?
I'm doing great. Glad to see you here, Sean.
It's fantastic. I was saying to somebody else, Kansas City, I think, is one of the most underrated restaurant cities in the country. Like, food here is good, my friend.
Well, especially, I'm the beef analyst. Like I told you, I only grew up, my home is an hour and 45 minutes west of here. This is what I call the barbecue capital of the world. Now, some may say it's Austin, Texas. Some may say it's Memphis, but it really is Kansas City. So,
what makes Kansas City barbecue, besides, the quality of the beef, what makes Kansas City barbecue so good?
Well, what you notice is every region of the country has a little bit different style and approach to really how they treat sauces and the type of sauces. So I would tell you that there are differences between Kansas City and Texas, but a lot of the differences come down to cooking style and quality of the beef differences. As you go to Memphis, it's more of a vinegar-based sauce rather than sweet. As you transition out to St. Louis, it's much sweeter, richer, thicker. Then you go all the way to the East Coast, more your Carolinas, your Virginias and such. It goes back to that more vinegar-based sauce. So it's more of some of those differences. At the end of the day, it comes down to preferences. But, of course, Kansas City gets it right. So,
Well put. The other common question my wife has asked me a couple times, have you seen Taylor yet? No, I have not seen Taylor.
In Buffalo.
What's that?
She's in Buffalo this week.
Okay, there you go. Okay, the beef markets. I'll tell you, are we having to recalibrate our price elasticity of demand assumptions we've made in the past? Like, prices have been very strong, and the consumer, domestically and internationally, they really haven't wavered. What's happening here?
Yeah, if there's two misses that I've had this year, it's great when you can look back on 9 months and say, this is where I was wrong, Sean. One of them was certainly how strong demand has remained. And it's easy to look back and understand some of the reasons why. I think you and I have talked about them before. When it comes to the animal protein space, when it comes to the food space, beef kind of stands out on its own. It's always been a destination item, right? And what I tell folks is, hey, think about Valentine's Day, or you take somebody out for your anniversary. The next day, you don't brag to your coworkers about the best chicken breast you ever ate, right? You talk about the steak. You talk about the Kansas City barbecue. And so when we think about that, we have seen those elasticities for protein shift over time. So that much is not lost on us. The last research that was really great research that was done happened right before the pandemic. Unfortunately, it had been about a decade since then that we'd had good elasticity research. But what it showed was the substitution effect that we often talk about where, hey, beef prices are getting so high, they're transitioning to pork and poultry. Those substitution effects have actually weakened in the most recent research compared to in the past. But what's interesting is the income elasticity in relationship to beef has actually strengthened. So what that means is if a consumer can afford beef today, even if prices go up, as long as their income situation doesn't change, they'll keep buying beef tomorrow. Where the concern is if their income situation does change and their income drops, then their consumption of beef will shift lower at a larger degree than it did 10, 20 years ago. And so what I'm saying is, yes, beef prices have continued to inch higher as we anticipate these tighter supplies on the horizon. But the good news is, even though the consumer is more stressed economically today than they were a year ago, 2 years ago, 3 years ago, their income situation hasn't declined enough for it to negatively impact beef demand.
But we've talked a lot about inflation, okay? So, and with that discussion has been affordability related to food costs. As a percent of the grocery spend in your average American household, beef has to be higher now in terms of that market share of that wallet, no?
It is, but one of the interesting ways to look at it is, and I did this in a past research paper, where I said, hey, let's actually, instead of talking about beef in terms of dollars, let's talk about beef in terms of how many minutes we have to work to pay for a pound of it. And what's interesting is today we're sitting there where the average U.S. consumer has to work about 9 minutes to pay for a pound of ground beef. They have to work about 11 or 12 minutes, if I remember right, to pay for a pound of choice beef, so a finished cut. That's actually about a minute of labor less on each of those items than where we were at the previous cycle highs clear back in 14 and 15, because incomes have grown over that 10-year window. Now, that doesn't mean that we're sitting here thinking about our expenses and our salaries in a 10-year window. No, we're looking at our grocery bill today compared to what it was last month or last year. But I think it does speak well to that relative income versus beef price gap and what exists there today. And what I tell people is, when you talk about inflation, when you talk about high interest rates, when you talk about buying power, consumers today are more likely to sit back and go, we're not going to be able to do that home improvement, or we're not going to be able to do that addition or that new home purchase. We're not going to be able to buy the shiny new car. We're going to drive the one we got an extra couple years. Those are more the decisions they're being forced to have as a trade-off discussion today. But within the food space, and in particular beef, there's a lot more opportunities to trade down or trade sideways without trading completely out. And the pandemic only added to that opportunity. We have food service opportunities where, hey, if all of a sudden we don't go into the restaurant, we save not only the 20% tip, but we also save the bar bill.
Yeah.
We have another situation playing out today where if we want to have a meal, but we're time crunched, so we don't have time to prepare it, every retail store around has more prepared options or heat and serve options that are high quality that are available to us. Just because of coming out of the pandemic, we created more of those options. And so I think some of that's offering opportunity today that changes that shift compared to maybe what we were used to a decade ago.
Well, I know that it's increase in price in the grocery store. Where I really notice it, because I'm on the road so much, just like you are. You eat at a lot of restaurants. You notice the sticker price in a restaurant. That is where it really stands out, and that's maybe personally where you get a little bit of that substitute effect.
Yeah, and I think that we're still sifting through who the real winners and losers are going to be as we've gone through some pretty significant menu price increases over the last several years. What you're seeing today is a significant decline in restaurant traffic, but it's not all equal. What I mean by that is, we're still seeing people that are going to quick service restaurants to grab that fast cheeseburger, to grab those chicken nuggets or whatever. They're still going to white tablecloth, but what we are seeing is less traffic in proportion relative to casual dining. And in fact, just a news headline the other day is, TGI Fridays is going through financial troubles and bankruptcies. I think that segment of the restaurant business is probably getting hit disproportionately hard because they don't have a differentiator in terms of atmosphere. They don't have an ability to spread those costs utilizing technology. And some of those challenges are certainly adding up there today.
How long do these prices last? Like we talked a lot about the cow supply, and in order to increase beef supply, you got to have good weather and you got to have good money. Well, every year's going to be different on the weather front, but we've definitely got the money part figured out. How long does this last?
Yeah, and I think that's exactly it. The money side, we're getting to see some stronger prices. Now, there's a double-edged sword to high prices. Yes, you get better revenue coming in, but now if you're confronted with the prospects of a rebuild, you have a bigger cash outlay. And so I do think that we have a math problem in the cattle business, whether you're in Canada or North America in general, where we're sitting here today. Let's talk about feeding cattle. In U.S. dollars, because that's what I'm used to, it costs $2,500 to $3,000 a head in working capital to finish a fed steer in the U.S. today. Yet, when we talk about the returns on a cattle feeding business, we're still talking about that kind of traditional 80% range is going to have a profit range of plus or minus $100 a head. So your return versus your risk is way out of balance because that $2,500 to $3,000 of working capital is double what it was just a few years prior to the pandemic. So that's a big challenge. I'm just talking feedlot there, but that same math works all the way down to the cow-calf level. Then you think about just weather going on in Canada right now. We are seeing some pockets of some drought relief here and there. I know some of our friends in British Columbia, northern Alberta, they've seen some decent rains in the last month, but there's still some extreme pockets of dryness, and that's happening in the U.S. right now. We finally have seen some recent relief over the last 2 weeks, but up to just a few weeks ago, we still had 60% of the nation's cow herd in some areas were affected by drought, where clear back in the spring, it was less than 30%. And so we're still seeing a lot of volatility in these weather patterns, a lot of spottiness. We got to have some confidence in these weather patterns that we're going to get some staying power with some precipitation so that we can invest in the next rebuild.
Absolutely, the next generation, for sure. So, okay, so that's on the rebuild part, but what these prices, are they sticky here? Or what I hate, don't say this, because you will jinx it. Do not say this is some sort of new normal, okay? I'll kick you in the shin.
Okay, fair enough. No. One of the things that I've been telling cattle producers is I'm a big fundamentalist, but also any good market analyst is a technical analyst too. And so utilizing charting and things of that behavior. I was looking back at the 10-year window that parallels best to the one we're currently in with this cattle cycle. And in particular, I was narrowing it down to the period from 2010 to 2013. And what you saw in that period of time, and really it was 2009 to 13, that 5-year window, as we came up from the Great Recession lows in 2009 and started rallying the market moved higher very quickly. And then it kind of plateaued into a trading range that was still higher, but only subtly higher from 11 to 13, that kind of 3-year window. That's very similar to what we've just gone through. We came out of the pandemic on fire and really put a lot of money back into this market coming out of the pandemic as we got the bottleneck of cattle behind us and then walked into a phenomenal demand period, right? Well, once we got to about 2021, 2022, that uptrend really tapered off. We're still trending higher, but it's a lot more subtle than the first few years of that 5-year period. Now, think back to that 11 through 13 period. What happened in 14 and 15? We had the explosive blow off top. The reason that had to happen, we needed to rebuild the herd. We took heifers finally out of the production system. We still are not taking heifers out of the production system. It doesn't matter whether you're in Canada or the U.S. The story's the same. There's not enough optimism there, and people would rather take the big check now than try to pull back on that big check to rebuild for the future. And that's unfortunately where we are. And so my message to producers is we can still see this market move higher because supplies are still drifting a little bit softer. But we're not going to get that big drop-off in supply until we start pulling back heifers and keeping them on farms and ranches. We're not doing that this fall during this fall run based on everything I'm hearing. That means we got to wait until 2025 and the fall run then to really pull those heifers back and develop them for the future.
Exciting times. Lance, really appreciate it. All the best to you.
Yeah, appreciate it, Sean. Thanks for coming out.
We'll be back with more RealAg Radio right after this.
If you're serious about agriculture, RealAg's got you covered.
For over 10 years, we've listened to and shared what producers have to say about everything from policy to agronomy from coast to coast.
Keep up with the latest in Canadian agriculture at RealAgriculture.com through daily newsletters and check out our YouTube channel.
Thanks for joining us in the RealAg community as we continue to cover and serve North American agriculture.
Infuse some energy into your next corporate event, customer meeting, or conference with RealAg Radio, Canada's national agriculture radio show. Create a unique experience at your next event with host Sean Haney, broadcasting RealAg Radio live on SiriusXM, featuring exciting guests, captivating interviews, and the latest news from the agriculture community. Contact advertising at realagriculture.com or call 587-787-1795 to book your on location with RealAg Radio today. Welcome back to RealAg Radio here on Rural Radio, channel 147, Sirius XM. I am your host, Lyndsey Smith. This segment is brought to you by Canterra Seeds. That's right, RealAg listeners, Canterra Seeds has 8 bags of their new CS 4100 Liberty Link canola available to be won by one lucky listener. Visit Canterra.com/RealAg to find out more and to enter. All right, as promised, you're going to hear now from Christian Hebert and Evan Shout in conversation with Darryl Monette of Monette Farms out of Saskatchewan, talking about growth and about going from, renting and buying that first quarter section all the way up to running an incredibly large grain farm in Saskatchewan.
You've never been scared of growth. You go back to that first quarter, though. I mean, let's be honest, there's lots of speculation about how you buy land and debt and all that stuff. And I'll guarantee you the most levered you ever were was buying the first quarter for 40 grand.
With farming, it was, I remember in 2006 that was 2 years after I bought that first quarter. How am I going to pay for anything, right? I mean, yields were down, cost of machinery, costs were always up. One of the guys I looked to when I was selling equipment, I was fortunate to be able to sell equipment over those years because the generation above us, you're right, I'm an 81 model. The generation above us, they're the baby boomers. A lot of them in agriculture were forced to farm, right? They were the oldest son or whatever. So we had the unique ability to be able to learn from people that could have been dentists, lawyers, accountants, entrepreneurs, everything. And two things they always said: build your shop bigger than you've ever built because you'll grow into it. And number one was spend more time with your kids when they're younger. And so those are two things. You asked about mentorship, but those are two lessons that I learned selling equipment, is that you have to look at the horizon, right? You'll always find a way to the horizon, if you're looking at your feet, you'll always stumble. So if you look at the horizon, you'll find a road there. And so, back to your question about leveraging. I mean, that's how it's been done, right? I bought a quarter. Timing is everything. You can have luck, you can have good people, but timing is great. There's people that I've bought out over the years that went through the 90s, the early 2000s. I said, even until 2008, it was tough farming. I don't care who you were, what kind of education you had, what kind of wealth you had. It was cutthroat. And I think we're probably getting back into that. But you look at the past 2 decades and we've just had a great run, right? And where appreciation of land, low interest rates, all of that has enabled my personal wealth, our farm's personal wealth, to continue to grow. And that was on levering. So I guess that's economics 101 for me.
Well, I think the interesting part is, and probably one of the first conversations we had, and we talk about it with farmers all the time, but I never actually maybe met another farmer to have super deep discussions about it, was really understanding that there's two businesses. There's real estate and there's farm operations, which you and I talk all the time, that in a perfect world, let's not even call it farm operations. Let's talk that it's a food production company, right? Because consumers understand food no different than the ag minister should be the food minister. And I mean, you go back, companies throughout history. I mean, McDonald's makes the majority of their wealth is built up in land, and something like 30% of their operational profit is based on land, and nobody knows about it, right? Like, it's been part of businesses forever to have those two things separated. And it was something, literally, I remember the first 2 times talking to you that you had a real clear vision on kind of the real estate side and the food production side. So maybe talk through a little bit of where that came from.
Yeah, it's probably one of the farmers I met when I was selling, and he said, you'll never be able to pencil out buying land. It's always too expensive. He was elderly, but I took it to heart, and it's been true. The first quarter I bought at 40,000, I remember penciling it out. It didn't make sense. Does 400,000, does 600,000? It doesn't make sense. But you look at, been doing some research, which is interesting. If you would have invested $1 in 1991 into farmland in Canada or the US, taking the average, you'd be up 2,300% today. If you did the same in the S&P 500, you're up 1,100. If you do it in gold, you're up 500%. So I know that's a time frame in history, but still that really shows that it's a land play. And I also had some young scouts over from Europe one time that were over here scouting for people to buy land. It was interesting because their mentor back home was like, it's the European model. I've toured over to Europe. There was 2 separate models there. You could never afford land in Europe and farm it, right? And anything that happens in what I call the New World, North America, started over in Europe, and we just are 100 or 200 years behind. I brought my kids to Japan this last March break just to see the culture and the growth and the years of, food production. And they are, talk about quality of food production. They're probably number one. Well, that's where all our wheat went, right? Kind of thing through the wheat board days. And so back to the land and the food production are two separate things, but are going to be the oldest industry in the world, and it's going to continue to be there. So the land is an investment that isn't going anywhere. You can touch it, feel it. There's more people that are reaching out, more of my landlords that want to see it as generational wealth. It's a tax implication too, right? Kind of thing. Yeah. You look at all the wealthy families in the world, they all have land, right? Of some sort, commercial, farmland, they have land. So that's what drove my vision, I guess, over the last, it's not a sexy one. Oil and gas was making more money than me by far, a lot of friends, right? But looking back now, I've went through that. Now it might be another 10 or 20 years of where farming isn't sexy, but long term, it's going to be there for us. And food production, I mean, that's our goal of an organization. We've changed it from everybody asks, oh, how much land do you want to farm? For me, it's not about land anymore. It's doing more with less. It's still about land. That's always an interesting, investment. But our goal is to feed 1 billion people. Divided by 4 pounds a day is what the average is. And so we're equating that back. How can we do the efficiency of growing more? We're more into irrigated land, more where water naturally falls, more row cropping, vertical integration, all of that to make it work and diversify. So, yeah.
So I got a quick question on that. You watch the rest of the industry, and obviously there's a lot of farms doing different than what you're doing, Darryl. So how did you and your team, keep that vision of, we know it's not penciling, but we also have this, we have this economics background and we know where the end result is going to go. How did you get your team to buy in, and how did you keep the train towards that ultimate goal in the end?
Well, I guess you look at different, it was private industry. It was me. I'm a driver, we'll put it that way. And this is what we're doing, but people are so important. It's always been important. Communication is key, right? I remember, this is a funny story. My first employee was an individual, and him and my dad definitely had different visions, right? And I was in the back of the combine hopper cleaning it out, and I come out and they both had each other's collars and arms cocked at each other, right? Kind of thing. And I'm like, whoa, what is this all about? And so that was the start of, communicating, right? People have different views, and at the end of the day, you just need to communicate. So, like you say, every year we do a review. Even though you're with each other every day, you have to have a formal review process. And we've even pushed that to every quarter. Even our senior management, this week we're having EOS training of communication. So, and that's where that started 3 years ago, about feeding 1 billion. But before that, Evan, it was just, this is what we're doing. It's, we're still feeding the world. We're working together as a team. We're culture. We're young, vibrant, efficiency, get work done, work hard, play hard, like I said earlier. And it's been great to align the team, right? I always said, people ask, why are you still doing this? And I'm having fun doing it. The day I stop having fun, then I'll maybe throw in the towel. But I also tell my kids they can use a lot of words at home, but they can't use the R word, and that's retirement. Because I always, when I buy land from people, I ask, what is your next step? Because 95% of land transactions are emotional. And if they don't have something they want to do after, I'm not going to force them to sell their land. They have to have a plan in place. And I think that's been key to success. We have a lot of good relationships with the people that we either bought or rented their land.
We're going to pause it there. That is, of course, just a snippet from the Truth About Ag podcast with Darryl, Monette. You can find the rest of that discussion on our YouTube channel. Just search Truth About Ag or scroll down there. You'll find it. Thank you, everyone, for joining me today on RealAg Radio. We'll be back next Tuesday with Tuesdays with Lyndsey. And, of course, Sean Haney will be back with a very special episode tomorrow, recorded at Agribition in Saskatchewan. Cheers, everybody.